Start.
Yeah, welcome everybody. Today we want to do a panel discussion on CO2 tokenization. ECOTA, as we call it, means European Carbon Offsetting Tokenization Association. It's a long name, but at the core it's about carbon markets in a tokenized way. ECOTA sounds much better than the longer name, and it's a project at this point of time. We would like to kick this off as an association in the future once we feel that there is market traction represented by member inquiries. We will see how this works. And up until that point of time, we will simply have very interesting panel discussions. We have excellent people here today. You will see this. And with this, I would like to directly hand over to the panelists here and ask everybody here in the room to briefly present himself, herself, and also give a little bit of a context. What's your role and what is your company doing? Maybe Adrian, would you like to get started?
Of course, yeah. Thanks for the invite. And to quickly jump right into it, I'm originally an engineer, then went to Ernst & Young, where I did a lot of blockchain projects in the B2B context, mostly. After that, found a research institute on sustainable innovation. And that's how I actually got into carbon markets, even though I was in the wind energy space originally. But yeah, we found out that as probably the rest over here as well, the carbon market is super unstructured, really opaque. And we were actually shocked. We were like, hey, this carbon market will never work the way it should be, also to actually be this tool against climate change. And that's why we found Senken, where we are basically a marketplace for these carbon credits, the first and biggest Web3 based carbon marketplace. And you can actually compare it to OpenSea or to Coinbase, making a new asset class accessible for everybody. And how we do that actually is by building on top of other Web3 protocols that are tokenizing carbon credits to bring all the supply and all the liquidity together in one place. But of course, not only relying on Web3 protocols, but also other infrastructure providers, like for instance, carbon ratings, which are playing a really vital role in carbon markets, and other players, like for instance, MRV players. And I'm the founder and CEO of Senken, and one of the protocols we're actually building on top of is Toucan protocol, and that's how I give over to Andy.
That is perfect. Thank you so much. My name is Andy. I'm product lead at Toucan. I have a business background, also started in consulting many years ago. I was lucky enough to be part of several fantastic teams co-founding 3 ventures. One of them was a carbon intermediary space. It's where carbon intermediary business, which is where I caught the bug of voluntary carbon markets, and slightly before that, I caught the bug of crypto. And then I figured out that Toucan protocol is a perfect intersection of these 2 things that I like a lot. What do we do at Toucan? We build the infrastructure for fantastic people like Adrian and his team to actually enable $1 trillion USD carbon market with tooling provided by the best generational technology that we have, which is blockchain and Web3. And with that, I give to Peter.
Thank you so much. Thank you so much for having me. So my name is Peter. I'm one of the co-founders of Sustain. I founded Sustain together with Milan Köhler and Alexander Krost. And we were incorporated only this summer, actually. And at the time, so mid last year, we were thinking a lot about terms like effective altruism, for example, and we're thinking about ways how we could, as entrepreneurs or with companies, enable scalable impact. And one thing that we thought about a lot at that time was actually the carbon market. So when we researched that and began talking to different stakeholders and market participants in the market, we were actually really worried, partly because the one side we saw that this is a huge opportunity for companies because some processes obviously can't be reduced yet emission-wise. But then again, like Adrian said, there are a lot of issues in this market at this point. And right now, as some of you might know, there's a lot of venture capital money going into this space, and that has caused partly a lot more intransparency, even because the whole market is becoming a lot bigger at this point. So out of this worry and this interest in the market, we founded System, and at this point we're advising our clients regarding the market, giving them an overview of what different options they have. So normally those are companies that have an intrinsic motivation to become more sustainable and compensate for their emissions in some way. And what we do is that we help them and provide them with different options to do so. And
Great. Thanks. Kara, up to you, please.
Thank you. So I actually earned my bachelor's degree in liberal arts and sciences, and thereby specialized in development economics and blended finance, which I now see is also increasingly becoming more important for project finance and carbon offset project development. After my bachelor's, I worked for various alternative asset managers, one of them building an impact investing strategy in real estate. And after that, I decided to do a master's in finance, where I just graduated from. And this year I wrote my master's thesis on the topic of blockchain and carbon markets, and currently bring a lot of this knowledge into the European Carbon Offset Tokenization Association, which Philipp just mentioned previously. And we are a think tank focusing on the use of blockchain and token-based solutions for carbon markets. And yes, I'm very excited where this journey will be going, because I think we at Ecota can bring a lot of value to the market. But I think I don't want to take away much of the topic right now. And I think we will talk about much of this during the panel, and great to be, very excited to be here today and talk about these topics.
Perfect. Thanks, Kara. So let's talk about the carbon market first, to also give everybody a little bit of an introduction of what's going on. What's the carbon market and what's the status? Maybe Andy, I think you're the best person to answer this, and then we do the entire round.
All right. So what's the carbon market? The carbon market is actually two things. There is a compliance market, there's a voluntary market side. Compliance market is something that was gifted to us in 94 by the Kyoto Protocol. Next to it, developed the voluntary carbon market, which is basically private actors who also want to further basically reduction and removals of atmospheric CO2. And we all here today, we try to support this part, the voluntary carbon market, to grow, which is something that is very well established and very well recognized, that we need this sort of like dual approach to attacking this problem, which is the compliance side and the voluntary side. And we see that more and more people become conscious about their choices. That reflects in suppliers and companies who create products for people, who employ people, who create services. Across all industries, we see that there's demand for participating and for actually doing and taking over a fair share of what we all produce in terms of emissions, because that's a negative externality. And we see with great joy that a lot of this this mindset basically proliferates really fast across all, like I said, all sectors and all industries, of taking over part of the bill of this and trying to do something good. And the carbon market is basically a tooling to apply the power of markets to climate impact and climate mitigation financing. So basically producing and packaging like positive externalities of climate projects that sequester a ton of carbon, for example, attaching a price to this, and then delivering it to somebody who is willing to pay for that and to support this further. And we are in a state where we definitely need to grow. We saw a fantastic growth over the last decade. We saw a very slow pace in the beginning, but very dramatic uprise in the last couple of years. And we need to continue this, and we need to further this even more. And for that, we need to build tooling because the market is also very complex and very opaque. I think everyone already touched a little bit on this, that it's very hard to participate in this market on both ends, both supply as well as demand. It's an expert market currently, but it's a global, not expert problem. It's everybody's problem. So we need to actually open up the market so that everyone can participate and will participate in order to solve this gigantic climate emergency that we actually have.
Yeah, you now mentioned market, global, international, token-based, and I would all agree here, but you are the experts on carbon tokenization, not so much me, but what I understood, I would agree, but you also use the word someone, someone is supplying and someone is demanding. I would like to go a little bit deeper here, maybe Peter, and maybe also Adrian and Kara later on. Who is someone, who concretely, precisely is selling carbon tokens and who is purchasing carbon tokens? Is it speculators? Is it ESG project? Is it German industrial corporations? Who is this?
Yeah, maybe I can just start and give a small example how the process could work. So there are different types of carbon credits in the voluntary carbon market, but maybe let's take an example with nature-based solutions. So, for example, you have a project that in some way pulls either CO2 out of the air or avoids the emission of future CO2. So what you have, for example, is a reforestation project, and this reforestation project then plants trees. And for that, basically, there are different market participants, but somebody comes in and audits this project, and he kind of measures how much CO2 is actually pulled out of the air or sequestered. And for that, for the relative amount, a number of carbon credits are issued. Normally, people work with 1 ton of CO2 equals 1 carbon credit, and these carbon credits are then sold and can, for example, be sold to companies that are wishing to compensate for their own emissions. So the way that works is that they then purchase these carbon credits and then can retire them, which basically marks carbon credits as used. And in that way, it's basically publicly visible that a certain company has, through that, compensated for their own emissions by basically supporting a certain project, in that case, the planting of trees. Maybe Adrian can say a bit more about the demand side there.
Yeah, great, thanks. Yeah, for the demand side, I mean, you just explained it how it probably should be, but it's unfortunately not that easy, because this whole value chain from, let's say, specific example, hey, I plant a tree or I plant a whole forest, until this carbon credit, this claim, because a carbon credit is nothing else than a claim, and as a claim, right? It claims that someone avoided or sequestered CO2. It's not that you can drive somewhere and say like, hey, I want my CO2. It's not, you basically don't have an underlying asset. So this whole value chain is not that easy, because what we see at the moment is that yeah, there are a lot of intermediaries which are not really adding any value in this chain, namely like brokers, maybe even platforms, maybe even carbon accounting tools, which are putting like 20 to 100% transaction fee on top of it. So why was that possible? Because most of these trades happening over the counter. So really often the other side don't really know for how much the other side bought it in the first place, and then they also can't really compare it to other projects because there's no transparent market. And what that actually has as a result, of course, companies buy these credits because they are on a decarbonization journey, and of course decarbonization journey means they want to reduce their footprint firstly, but in an industry that's being built up over more than 100 years, you can't reduce your footprint in 1 year, right? And that's why you want to have that aid of compensating your footprint. On the other hand, on the demand side, since this is the fastest growing commodity market at the moment, it becomes more and more interesting also for institutional investors and trading desks, which on the one hand maybe just trade these carbon credits because they see this opportunity, but on the other hand maybe they even want to act as a funder for these projects, because they maybe see, hey, I can fund this project before the issuance of these credits, and I pre-fund the project, and when the credits come out, like let's say 3 years later, and they get issued, then I maybe earn 30% on top of it because I took the risk in funding these credits. So for this to happen and actually to scale up, we need to take out these intermediaries, because if the market is so inefficient, no institutional investor is really, really interested in it. And especially if everything is only happening OTC, it's also not really interesting. And what mainly OTC market also means is there's no real liquidity in the market as well. But we can touch on that in a little bit. Kara, do you want to add something?
Please.
Yeah, I want to add something here. So if you maybe look at the numbers, by the end of 2021, the market hit almost a value of 2 billion, which is actually 4 times the value compared to 2020. And I think the demand is growing because companies are also exposed to increasing regulation, which are now exposing companies to sort of a level of transparency we never had before. And carbon credits itself become like an ever more important tool, as you already mentioned, in sort of the transition pathways of companies. And the market is experiencing a rapid surge in demand and will do over the next years to reach sort of the goals set by Science-Based Targets Initiative in the context of the 2050 net zero scenario, and which actually requires us to cut emissions by half by 2030. And yeah, it will expose companies as well as financial institutions to this huge journey of sort of aligning sort of the interests of all stakeholders. And yeah, I think what you now see is the market is growing and demand is growing, and it actually needs to grow or carbon credits in volume by 15 times to 2030. But now we see the market sort of seeing because of this all of the inefficiencies, and now there are sort of challenges on the supply side also to meet that demand. Yeah, and I think we already touched upon some of the challenges on the supply side, but we can also go a bit deeper into that or look at some of the reasons why.
Yeah, also interesting that you mentioned a couple of things with like legislation. You have maybe more compliance coming up. Companies are forced to buy this credit. The interesting question is the name voluntary carbon market then actually the right name? Because it's not really voluntary anymore. So I think this is also really interesting that you now have like regulated markets like COSIA coming in, the aviation market, which basically gives rules to what credits you're allowed to buy, but you have to buy them from the voluntary market. And I think this will be a really interesting development, how these two markets, you basically have the compliance market, they're now being put on top of the voluntary carbon market. So voluntary, not so much, I guess.
Yeah, excellent. I would like to add one question here to probably to Andy and Adrian. what can we do to prevent speculators from adding volatility to the CO2 price, which would basically lead to industrials and consumers and others to really stay away from the market? We know this from other crypto domains, right? Any idea?
Yeah, I think it's a loaded question because on the one hand, speculators are really good because they do us a favor. Because highly liquid markets that have a lot of trading have rising prices, which is what we need. We're way below, the social cost of carbon. Like buying average carbon credit for $4 is creating carbon slaves rather than helping us a lot. We need to push that up in order to make many more projects viable and to come online. We need to come to a working point of a carbon price that is tenfold that, probably. And in that sense, speculators can help, right? So speculators create a demand for this, but speculators, they amplify, trends, obviously. And we don't want to have crashes. So I think one of the things that we can see right away is that we wanna apply incentives. We want to put this market, we want to design this market, as we all do in our daily work currently. We want to design this market in a way that incentivizes the right behavior, that has the right trajectory, and things like cascading liquidations that we know from something that want to avoid. That you don't over collateralize people or under collateralize actually people with that borrow on carbon, but we still want to enable use cases like that. Financial primitives attached to carbon credits is a fantastic way of scaling demand and creating quasi sinks for carbon, which is what we need. And so I think there's no silver bullet answer to this. That's why I'm rambling a little bit, but it's a design and incentive question that we need to build.
I think the question also leads a little bit back to what I just said before. You have national markets, like for instance, the Californian carbon market or the South African carbon tax, which allow you to also bring voluntary carbon credits for instance, South Africa to lower your tax. And they put a price on CO2. So for instance, in California, I don't know what the price is, but it's way higher than the voluntary prices. And the same in the carbon tax in South Africa. And I think there will be more of these examples where national markets and national involvement maybe is needed on that side, put a price on carbon, and then they allow basically to also bring credits for 10% of the amount of your carbon footprint or something into play. And if you then have an efficient market where you can do arbitrage also, I think then we have the opportunity to bring it, or at least stabilize it more than a completely free market. And on the other hand, of course, it also generates a lot of demand for credits on the other side. So I think this is one of the tools to stabilize it, in my opinion.
Okay, perfect. We have one question from the audience coming from the YouTube chat. That question is basically something which we would have discussed later on anyway, but we now discuss it. Why blockchain? You know, what adds blockchain here? Why don't we use a database? Or the question goes as follows: why don't we use established European ETS systems, for example? Who has an answer here? Maybe Kara, why blockchain?
Yeah.
Does it make sense?
So maybe going back again a bit to the challenges, maintaining integrity and building trust is a challenge, I would say, mainly due to a lack of transparency in the voluntary carbon markets, also from the project statuses themselves. So you cannot immediately see, for example, how projects are performing, and it's difficult to understand sort of the level of performance, core benefits, and even if projects are sequestering carbon, it's not necessarily good for the communities, society, or biodiversity. So definitely there's a lack of transparency when trading is taking place historically in the voluntary carbon market, and that has been mainly due to like how the market has been set up. There's been no like real infrastructure in the market. It has been mainly trading carbon credits over the counter and sort of carbon credits traveling from broker to broker, and each imposing a fee, sort of taking out a lot of value in the market, and sort of leading to very inefficient capital allocation. And this also leads to like no transparency, and it's also hard to understand what is actually a fair price of carbon credits. So I think the biggest value add of the blockchain here is really creating sort of a better infrastructure for carbon trading, but also again sort of to really bring a new level of transparency into the market, and really the ability to sort of have all sort of the metadata attached to tokens which sort of represent a carbon credit, or like basically one carbon credit could present or does present like a, for example, reduction emission reduction, and there you could have like all the data is stored behind on what is actually the project about. But I think Adrian and Andy maybe can also add some really interesting points here.
Yeah, I think you did it or touched it, all of the good points perfectly. I want to address the question from the EU ETS side, because I had a couple of, or like basically what we first wanted to do is bring blockchain to the EU ETS, when we had a lot of workshops with the European Commission on that, and then realized that what the EU ETS and the EU ETS has only one product you can buy. These are the allowances, the EUAs, and it's a commodity, and it does not directly funnel the money towards climate projects. It also invests into infrastructure projects like developing better streets and all these kind of things. But what we have in the climate world, in the environment around us, we have so many different projects out there. Like the one forest, maybe let's say in South Africa, is completely different than the forest we have in Germany, and even like 100 kilometers further down in South Africa. So what we need in order to funnel money into climate is not like one single product, one single financial product. We need really a lot of different products in this market, because we also have, I think there are more than 170 different project types out there, from forestation, from now we have direct air capture with Climeworks, we have biochar, we have seagrass. There's so many different projects out there that just don't fit into one financial product. So in order to actually have not only one product, but rather a really big differentiation and diverse market, because it's not only carbon that also comes with it. There are also co-benefits, which, for instance, sustainable development goals or biodiversity certificates. We need a lot of different projects. But what does that lead to? To a lot of fragmentation, to a lot of different data, because all these projects have different data. Like Climeworks with its big filters, they of course capture a lot of different data than, for instance, a forestation project. So you have to bring all these different stakeholders that come with these projects, all the fragmented standards. You have to bring a lot of stakeholders, a lot of data all together. And if blockchain is one thing, then it's a coordination tool. And I think that's the reason we need a different market than the EU ETS to address environmental change. The EU ETS has also its place, but it needs the VCM next to it.
Yeah, and maybe to add to this, you guys touched on all of that, on all of the fantastic points. Absolutely right, and Ariane did a great job on adding to that. And I want to put one layer on top of that, which is efficiency, because all of this, like transparency, can be established and is today even though it's an opaque market, but people investigate into it. But it's very costly. You have to have third parties involved into this. And I challenge everyone in the audience to go and retire 100 kilograms for your flight that you did, which is offered to you, and try to find that in a registry today. It's impossible. You're not going to do that. So transparency can be done, but it's super inefficient. Same as security, same as incentivization and coordination of people to do the right thing. It can be done, but blockchain can actually program carbon. Blockchain can make carbon composable and can make carbon act algorithmically from the get-go and repeat that hundreds of billions of times without anyone being involved and without any possibility of human error, without any possibility of rogue behavior. Right now, we have a $2 billion market, but when we are successful and we have a $200 billion market, or what we believe $1 trillion market for carbon credits, having $1 trillion of assets and multi-trillion dollars of transactions being settled on IT technology from the early 2000s is kind of scary to me. So we have the most efficient and the most secure and the most bulletproof systems available that we ever had as humans, and these are blockchains. And it's a big disservice to us if we don't use that. And another topic is that we see constantly where we see also the conversation going, is that we want to be interoperable across jurisdictions, for example. And a lot of carbon projects come from places that are not as jurisdictionally stable, let's say, as the EU, for example. And having sitting millions of tons and billions in value maybe later in registries that can be turned off or can be with the strike of a pen go away, is also nothing that we should be furthering either. So decentralization for one of the most valuable assets that we have is, I think, material and substantial for us.
I'd also like to touch on 2 points here, actually. One that Andy already talked about too. So if you think about infrastructure and building infrastructure, one important thing, if you especially think about how a carbon market or the whole compensation scheme could look like in 5 to 10 years, one thing that is possible with blockchain is technical integration. So there are a couple of firms that are already working on this and have developed pretty good products. One thing that could work very great and that could be massively adopted in the future is, for example, integration through APIs into checkout systems. So if you take a flight or if you buy something in an online e-commerce store, what you could do is not only offset the specific item that you directly bought while actually purchasing it right away. But if you have a good registry and if you have a good system in place, you could also see this transaction right away on the blockchain, attached basically to exactly the same SKU of the product that you just bought. So that's really amazing in terms of transparency as well. And another thing that blockchain can do with smart contracts, and in contrast to old databases, is that you could think about imposing new roles to the smart contract itself. So if you would, for example, say, logically, the reason why carbon credits exist is to compensate and offset them eventually by companies, at least I would say that's the main thing. One thing you could do is impose a rule on a smart contract where you say every time a token is traded, part of that token's value or carbon credits value actually goes back to the project developer and is invested in some kind of pool, for example, to make even more projects possible. So by that, you can actually, in a way, incentivize the market as well.
Yeah, I think that have been very interesting points. We have another question coming from the audience that basically is, what are the panel's thoughts on how to open this up to institutional investors, for example, pension funds and so on, because they might struggle to risk approval, investment policies, and so on and so forth, because the question is always, can they invest? How would they invest? It's token-based, it's not financial instruments. What is it from a financial and regulatory perspective, and so on and so forth. And with this, we are also touching the question which we have prepared, which is, how is this working with regard to trading desks and buyer groups? What's happening basically on the buy side? Yeah, I think that's one larger group of questions. Who is acting here? Buyer groups, trading desks, and also then the hint towards more larger players such as pension funds and so on. Who wants to take this question? Might be a difficult one.
I can touch on it because we mainly talk to trading desks, pension funds, institutional investors next to corporates. What's actually happening in that markets evolve really quickly, as we now realized, and of course it's a commodity that evolved really quickly, and it's a market that is also a little bit unrelated or not correlated with other markets at the moment. So this, of course, makes it really interesting to have on any kind of fund or any kind of balance sheet. And of course, you also for all sorts of ESG matrices, you have it also has a good impact on that. So what we actually see at the moment is that a lot of the institutional investors and pension funds at the moment, they actually already decided they want to participate, but so far they can't really access the market because on one hand, it's not homogeneous enough. There's not one access point where you have all the different assets next to each other, where you can compare, where you see also analytics and so on. So far, this has been really opaque, and also the liquidity hasn't been there to actually trade in the amounts the pension fund and so on needs to trade. So a couple of things that have to happen, especially also from a blockchain point of view. First of all, you need to make carbon credits, especially Web3 based carbon credits, accessible for institutional investors. And I think, Philipp, it's one of your favorite topics, right? How do we make this?
It's so funny because I have heard exactly the same stuff 3 times now in my life concerning ICOs, crypto assets, NFTs, DeFi, and so on.
Yeah.
And my conclusion is here, it will not work. It will not work because yes, the institutional funds, they are partly finding this very exciting, and some of the money will flow in. I would perfectly agree, but I would say that 95% of the people are staying at the sidelines, and they will continue to stay on the sidelines because they first primarily don't understand it. They also don't have the capabilities technical wise, and they also don't have the policies in place to invest. So the question is, which of the 5% is entering the market and what is then coming next? But I heard this now since 6 years. You know, it's exciting. I want to invest in pension funds and institutional money and so on and so. What happened? Nothing, except, for example, with Bitcoin, MicroStrategy, and a couple of ETF providers and trackers and so on. But largely doesn't work. It doesn't work.
So I think we have to create products that are built on top, right? That are actually accessible then for the investors and meet the investors where they feel comfortable. I think the difference in the carbon market is a little bit, and this I think in general I find a really interesting conversation I have with institutional investors, but also with like veterans in the carbon market, is that the carbon market may be gonna be the first real world asset market that will be completely on chain, because it hasn't been working before. Like in the financial industry, at least, it was working to a certain extent. So you have a lot of roadblocks, a lot of people who don't want to go to a new infrastructure, but the carbon market wasn't working. So I'm now with the International Emission Trading Association and their conference in New York, which I attended 2 weeks ago. Everyone agrees that the whole market has to move on chain. The registries, which Vera and Gold Standard, they issue like 80 to 90% of the whole market. They now ramping up to bring the whole market on chain. So what will happen if suddenly the whole market is on chain? And it is moving towards it, because Vera and Gold Standard said, hey, in the future, they only want to issue Web3 based carbon credits. The World Bank with their climate warehouse, they're creating their registry completely on chain. So I think maybe we have the first real world asset market which will be completely on chain, and then we have to build products that meet the institutional investors how they used to interact with the market. I'm completely with you. I mean, with EY, I went through this whole journey as well, and it will not happen in the way we all would dream of it. So we have to find solutions that are in between, and this is for me also the only way to expand to the big market and not only have the 5% who are curious to get their feet cold.
You know, why am I mentioning this so boldly? Because what happened in crypto, you know, not what we are talking about now, but crypto assets, what happened, the stuff which has been expected by 2017, you know, like 5 years ago, the stuff which has expected did not happen. Whatever have been advised by consultants, lecturers, including me, did partly not happen. But what did happen, you know, DeFi, NFT, metaverse, what did happen is the stuff which nobody expected. So we should always, in this market, also expect the unexpected, because that's probably what will happen. In case we would expect institutional money to flow in, I doubt it. I really doubt it. But there will be some micro strategy like guys of people and some funds out there who will get started and who will do it. But it's then just the beginning, and at the end of the day, we will all have to conclude that it will take a little bit longer time than expected. I would like to pose now.
I actually maybe
yes, please,
have something to add here, because it's also like a huge opportunity again for banks to also develop new capital market products, and I think a big one will also be risk management, right? So sort of the ability to manage carbon pricing risk with new hedging products, for example, or investment in carbon instruments or derivatives with emission compensation, or investment with emission compensation, or just, you know, let alone mobilizing investments to finance carbon markets. So I think there's such a big opportunity for banks and capital markets when it comes to carbon markets. So I think, you know, there has to be like this level of engagement, looking at it and see, you know, which solutions will you be able to make work as well.
That's a very interesting point. And again, I have heard this exactly the same with Bitcoin. You know, it's a huge opportunity for banks and so on. And what happened at the end of the day, up until now? Nothing. Honestly, nothing. And therefore, but banks are starting with it, you know, Sparkassenverband in Germany and other ones. So it took probably 5 years up until things are now happening. So assuming that ESG is more important, I think that's what we agree upon. We can expect the cycle time to not be 5 years, but just maybe 3 years. So I would expect banks and larger ones to move into this market in 2 to 3 years. Would you agree, or is this too optimistic, too pessimistic? What's your view? You know, like larger asset managers and these guys, what would you be your best?
I mean, I think large asset managers are already looking at it and engaging with the market, and I guess it will take some time. I think 2, 3, 4 years, and I think there's you know, a lot of challenges that the market has to figure out, you know, for itself now in terms of, you know, also creating, you know, more standards or maybe a taxonomy about, you know, so many aspects of the market itself. But yeah, I think I would sort of agree with that time frame. It could take some time, but yeah, I think it will also evolve with the market itself, and see like how, you know, all the new innovation and technologies also materializing in the market as well in the next few years.
Yeah, I would agree. Last question from my side for this round today. We discussed it previously very shortly. There are a couple of business models already arising, you know, like trading marketplaces, other ones. But in case we assume that carbon will be transforming into a business, like a huge industry like oil and so on, then there will be tons of business models out there, plenty of opportunities, thousands of startups, some of them grow, some of them don't, and so on and so forth. So where do you see gaps in the value chain or in the ecosystems which are not addressed yet by people out there, right? Any idea who wants to give it a start? You know, let's make a quick round to not take over time. But where do you see potential business models, ideas which have not been tackled so far, assuming that this will grow like the oil industry? Any idea?
Please.
Peter, or Andy?
Yeah, sorry. Please, everyone who's looking for a great business model, start looking into DMRV, is what's called, which is putting transparency to the carbon markets in the beginning and measuring output, measuring the performance of things. And I think that is one of the gigantic areas where we can create fantastic jobs, well-paying jobs on the in the Southern Hemisphere, where most of the projects are. And this is something where we sink most of the money into currently, like establishing transparency into the outcomes. So any kind of digital businesses, or be it the gig economy or whatever you guys think of, that's desperately needed.
I also agree. I think especially at the supply side and in the beginning of the whole process with the measurement, etc., this is really the most important point, because if you think about it, all the different business models really are based on carbon credits. And what I'm really worried about is that I've seen a lot of new business models or opportunities or companies springing up in this market that are still based on carbon credits that are inherently intransparent. And there are a lot of businesses out there that offer some kind of solution that sounds very novel and very exciting, but doesn't really go into the transparency aspect. So if you have an interesting and cool business model, but the actual carbon credit that you're working with is still a bit shady or not transparent, then your whole business model, in my opinion, is still not really a good business model or a good business. And in that way, I think, especially if you go into tracking carbon sequestration in the beginning, or also if you talk about avoidance projects, really finding a way to track in what way emissions are avoided and having data for that and proving that, that's really valuable to all the players in the market.
Interesting points. Adrian, Kara, any more points from your side?
Kara?
I think a really, interesting concept, maybe that needs a little bit more attention as well, is carbon offsetting versus carbon insetting. And I think when you especially look at carbon insetting, I think there's a lot of opportunity again for companies to take more responsibilities inside of their supply chains as well. So sort of scope 3 emissions. And I think there still needs to be also a lot of work around to be done on creating, again, methodologies, common standards, and how does it also align with the carbon offset market, and also where does it fit into tokenization and blockchain as well. So I think that could be like, a really interesting point as well for the future.
Yeah, and so, of course, I have to vote for education. That's, of course, also missing in this entire space. This would help you a lot, everybody here, right? Adrian, please.
Yeah, that's what I want to say as well. But no, I think MRV, of course, but I think also not enough capital is flowing into that market at the moment. So we need all sorts of products which would enable to have more capital flowing in it. Things like, for instance, insurance. I know there are a couple of companies now coming up, but there's way more work that needs to be done on like insuring carbon forward deals or carbon funding deals. So I think this is also going to be a really interesting vertical.
Excellent. I think this was a very, very nice round. As said in the very beginning, with the ECOTA initiative, we would like to promote the technology. We would promote the urgency of this entire topic. In case you're interested, then please let us know. We are building up the entire infrastructure. Once we are finding enough members, then we will legally found the association to give it like a formal vehicle, so to say. It will be not be a DAO thing. It will be like a normal association style of thing. In case you're interested, let us know, and we will try to do exactly such online panel discussions like here, let's call it roughly every month, to disseminate the knowledge. And we will try to invite also the people in the field, the best people which we find, which we can approach. And let's hope to basically also help promoting this entire sector of crypto assets, so to say. Thanks for being here, Adrian, Andy, Peter, Kara, thanks for being here. It was a pleasure. And have a nice evening, everybody.
Likewise. Thanks.
Thank you.
So much.
See ya.
Thank you, everyone. Ciao.